Lalit Malik, CFO of Dabur India, joins us now. Lalit, good morning. Thank you for joining us. Lalit, the key consumer for Indian consumer companies is that consumer spending is slowing down. Volume sales or volumes have been anemic, and price competition has only intensified. What is your understanding? What is your reading?
Yeah, I agree with you. I think there has been a slowdown in the FMCG industry. That's what we also get the data from external sources. Considering the environment that we are in, there would be an impact arising on account of exchange, which will slow down, and followed it up by the flood areas as well as what happened in Uttarakhand. It would certainly have an impact. But having said that, there has been a potential on the rural side. The monsoon seems to be very good. So there will be an offset impact also, and therefore I think it will be a consciously optimistic performance that we see for this quarter too.
What about the currency depreciation and higher crude prices? Because they again would be turning out like a double whammy for companies like yours.
Absolutely. I think if we look at from our standalone legal entity in India, certainly there is an impact of the steep fall in the rupee on account of exchange. However, that has been mitigated to some extent due to our exports, which is a natural hedging, and also on consolidation basis on account of the translation gain that gets offset. Having said that, there would be certainly an impact of exchange on the import side. Plus on the indirect side, where the fuel price will go up and the raw material, the pressure is going to be there on the margins as we see for this quarter and going forward. We are geared up to look for our synergies and the cost reduction measures to mitigate to the extent we can absorb these pressure on margins, and then we will see how it pans out as the exchange and the inflation goes from here.
Lalit, there are two consumer markets in India, urban market and rural market. Urban market is slowing down, rural market is yet to slow down. The market you represent is a semi-urban and rural market. What's happening in those two markets?
Well, in urban market, it is slowing down, that's correct. On the rural side, we are growing pretty fine, and we do expect the growth to come given the expectation of good monsoon. Temporarily there would be certain impact, but overall we see rural market to grow, followed up by our institutional sale growth. We do see the compensation will happen to the extent there will be slowdown in the urban market.
Which categories are growing for you? Which categories are not growing for you? And since the consumer dynamics are shifting, what are some of the new changes you plan to incorporate or you've already incorporated in last 1 month?
Well, I think what we see here is certainly some of our products are seasonal. So if I see our sale on glucose due to monsoon gets impacted a little bit, but on the other hand, the other product categories, or whether it is on the healthcare of Chyawanprash or whether it is on the fruit juices and other category on the home care, we do see a trend picking up due to festival seasons and going forward. More festival seasons to come. So we do see a mixed impact on the different product categories. If we look at our last 1 month, as I just said earlier, there have been a little slowdown on account of the flood situations and the environmental impact on Uttarakhand, and last quarter on LBT. Some associations, they were closed down on the shops. So we do see some impact, but we also see at the same time the compensation coming from the rural market. Also on the institutional sales we see an upside. So there is a offset to some extent happening, but in terms of last 1.5 months we do see a certain slowdown there. And on the cost front, as I said earlier, there is an impact on account of import exchange. At the same time, indirectly we do see on fuel and other raw materials some of the costs going up.
So are you looking at passing these high costs on to your consumers? Can we expect a price hike as well from you?
Well, yes, we will be taking some selective price increases on the discretionary products. As I said earlier, we will be doing some compensation in terms of our cost efficiencies, but if required, we certainly will have certain price increases depending upon the inflationary impact that we will have on our cost of production.
The quantum of the price increases? Mr. Malik, what could be the quantum of the price increases? Are we looking at a 5 to 10% price hike across select categories, or could it be higher than that? Okay, I don't think my audio is reaching the guest. We will, of course, connect with Lalit Malik, CFO at Dabur India, in just minutes from now. But yes, facing pressure, that really is the key takeaway. Revisit what the broader market then is up to. Well, it's just about trying to inch up. Optus Circuit has made a decent move. It's a small base stock, but nonetheless, it's holding up by about 4%. Bank of India is looking smart. It's a 4% uptick on that one. IDFC, BOB, Yes Bank are some other names which are looking smart, and Biocon as well has sprung up pretty smartly. It's a good 2.5% uptake that we're currently seeing on board. Mr. Lalit Malik is back with us. Mr. Malik, is my voice reaching you clearly?
Yeah, I think it's fine now. We can go ahead.
Okay. I was asking you about the quantum of price hikes that you are looking to undertake. Is it a 5% price appreciation, 10%? What is it that we're looking at, and how soon?
Well, we are targeting during the year around 3 to 4% price hike as of now, and we will see as the inflationary pressure will pan out with regard to selective categories. We will be taking the price increase.
Do you have
certainly
enough?
3 to 4% is what we have planned it as of now.
Do you have enough buffer, and do you think your customers can digest a price hike, or somewhere in the short term you will have an impact on your margins?
Well, we will certainly absorb the margins as much as possible, as I said, with regard to our efficiencies, cost control and synergies, and wherever there is a margin pressure that will continue on a selective pockets and discretionary items, we will be taking selective price increase going forward.
Give me a sense of your market share, because at a time when market is not growing or market is contracting, I've historically seen that consumer companies or FMCG companies, they always fight for market share. What is happening to your market share in some of your key categories?
Well, as far as our market share is concerned, certainly we are maintaining the market share and growing in certain pockets, whether it is home care or whether it is food categories. We are growing our market share, and even health category on Chyawanprash we are maintaining as well as growing to some extent, though the overall market pipe is being constant and not growing at a rapid pace as was expected. So there is a slowdown on that regard. So we will see some impact coming on the top as well as on the margins. But with regard to the market share, we are maintaining and steadily growing our market share. As far as India is concerned, with regard to our international markets, we are growing our share. So we were 30% till last year. We are already 32% of our top line comes from the international market, and we are growing rapidly on that geography.